You're tuned in to Agriculture Today, and on this Friday, as we usually do, we start our show with a grain market update. And then to give us that grain market update is K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Yes, thank you very much, Shelby. As we, not to hop in on you, but I'm just so anxious to talk about the weather market that we've got and all that's going on in the grains that we couldn't be set up more to talk about interesting things, I would think.
So, talking about the grain market, what are futures looking like?
Well, we've had a volatile week here. Earlier this week, we had a day when corn, soybeans, wheat were all jumping 20, 30, 40 cents, 50 cents for some of the soybean contracts. And here yesterday, and that was about Tuesday or Wednesday, and then yesterday saw the markets give some of that back, especially soybeans. Not so much in corn or in wheat, but for soybeans especially. So I wouldn't say we have unprecedented volatility because we've seen this before just a year ago in the midst of COVID and all that was going on, a year or two ago in the midst of COVID, and then last year with the Ukraine-Russia side of things. But we've seen, in essence, when you go market by market, we see on yesterday's markets, July corn closed at 660 and a half, and that's up basically 56 cents from the 9th of June. So from the 9th to the 23rd, about a 56-cent increase. Dees corn, which is what we're looking at for the bellwether signal of where new crop prices could go, closed yesterday at 620 and 3/4, was basically at 530 2 weeks ago. So we've had that much of a run up, driven by dry conditions in the Western Corn Belt. We'll probably talk about that, in the Central and Eastern Corn Belt. And you can see it on drought maps. We'll probably, if we have time, we'll talk about that more so later. Soybeans closed yesterday, the July contract at $15. So we're back over 15. We were 2 weeks ago at 13.86. So we've gained about $1.30, $1.35 or so. The new crop November contract, 13.39 and a half yesterday, had been 2 weeks ago at about 12, just over 12. So again, strong gains, real drought awareness, drought fears coming in. The and for hard red winter wheat, and again we have harvest starting in the state, almost upon us in earnest. Most of the time, in normal market years, these are times when we'd see prices go sideways to lower, to be quote soft, as we say. Anyway, closed the July contract, July Kansas City hard red winter wheat closed at 871, had been at 797 2 weeks ago. So again, another 80 or so cents gain. And farmers probably are wondering what the possibility is for prices to move even higher. I would say, when I look at things chart wise, just taking a quick look back at corn, the close at 660 and a half, after having gotten up to 670, is pretty important. That 670 was up to areas where we had traded back in February or March. So we've had volatility that's taken us back up to areas that we're probably going to want some confirmation or some more information before we jump higher then. So that's thought provoking. The lowest that contract had been was back in early May. It got down to about 545 or so. So, again, drought certainly affected us. For soybeans, going the same order, again, we've gotten up to, on the high end of trade, just under 15, about 1520. That was the high for that contract yesterday. We had been up to about 1530, 1540. So when the markets start jumping around like this and they don't know exactly where to go, they pay attention to where they've been. So so both of those markets have jumped up to areas to where now they're looking around and saying, hey, we're up here. Do we keep going or not? So that's something to think on in terms of people wondering about the future direction. And then, of course, for wheat, we just about have just about have new supplies of wheat to varying degrees coming in around the state. Some areas, of course, damaged or destroyed crops. Other areas with late rains have come through decently. Anyway, closed as we talked about yesterday at 871, and we had been in early May up to about 920 or so. So you've got a little bit farther to run before you run into the most recent top end side of things. So um, I I think that most of the attention of people right now in the wheat market, if they have wheat out in the field, they're going to try to get it, go try to harvest it. We do have reports, at least as of the 18th of June, which was last Sunday, as I'm thinking, Kansas reportedly was at about 23% harvested. We've had decent weather. What are we now? 35, 40% harvested. And we hear harvest reports coming up from the southern part of the state, and they're mixed, some really good, some not, just up and down. I think over the next 2 weeks, we'll really have a lot more evidence to work with, Shelby, with regard to what we actually have out there for bushels, that may or may not affect what the trend is on prices. Although I think that all that's going on in wheat, in both our winter wheat crop, the hard red spring crop, now it's got some dryness affecting it up in the Dakotas, what's happening overseas with Ukraine, Russia, are all an amalgamation of roiling factors that have got the wheat market really kind of wondering what direction to go. And again, same old story, and that we see this happening without a lot of strong U.S. wheat exports. In fact, the numbers working out that in some parts of that there are concerns by domestic wheat producing organizations of wheat actually coming into the country, to compete with domestic producers, domestic storage of wheat. So just we have a whole mixed bag of factors affecting the wheat crop domestically and internationally. And yet with that, I think the key factor, though, is the drought in the central and eastern corn belts strongly affected the corn soybean crops, that the impact is rolled over onto the wheat market. And now ag producers with crops in the field and uncertainty in production are looking at these new crop corn and soybean contracts and are wondering, hey, do I price some of this stuff or not?
And so is it fair to say that right now the markets are a weather-led grain market?
Yes, definitely. And you can see it in some of the weather service products that are put out there to give us at least graphic representations of how dry things are. I guess the western part of Kansas this year, generally either normal or wet, given what's happened in the last several weeks. And you can see that on a predicted soil moisture anomalies predicted through June 28th. But what we see now in eastern Kansas looked like western Kansas last year, and just very, very dry predictions of soils, and those same very, very dry predictions of soil moisture go right straight up into Nebraska. For eastern Nebraska, are catching all of Iowa, all of Missouri, to varying degrees, all of Illinois, Indiana impacted, southern Minnesota, Wisconsin, Michigan, really all over these major corn producing areas of the United States. And so just a lot of concern on the parts of corn users, for sure, just because of their the fears that supplies be cut back pretty sharply, and instead of early projections of over 15 billion bushel corn crops, now we're looking at, if rain does not come into these areas, are we going to get 14 and a half? Are we going to get 14? Heaven forbid, are we going to have, like we had last year, 13.7 billion bushels? If that happens, then we'll have high corn prices for those that can grow grow the crop, but on the other side, a real stress in the industries that are trying to buy this stuff and turn it into either energy or livestock feed or to export it.
And Dan, we've talked about the future markets, but what about cash right now?
Yes, of course, if there's one thing that's happened, of course, cash prices are higher as they followed this. But you've seen in some of these places, it seems like in the corn market that it's almost as if the elevators in the state have decided in this current situation have let the futures take the price higher and still have pretty strong basis levels, but surely not as strong as we were when futures were a lot lower. So you've seen that happen. So generally corn, sorghum prices, corn prices run from a high of 724, 721 in Hutchinson, Columbus, to a low of 681 and 681, 675 in Colby, Salina. So strong grain sorghum bids, all running from about, at least the places that we're watching, the top ones, running from 661 to about 686. So strong there. Soybean bids all over 14, again, across the Colby, Salina, Topeka, Garden City, Hutchinson, Columbus area. Again, these are the top bids in those areas. And for wheat, with harvest impending, all the wheat cash prices are all sitting there with an 8 in front of them. And they're ranging from 826 out in the western part of the state, Colby, Garden City area, 875 in Salina and Hutchinson in the central, and in the east about 840 to 856. So these are great prices that but I think our producers would be a lot happier if they had more surety of what bushels they're actually going to have for the next crop before they actually take advantage of some of these prices they have in hand or have offered to them right now.
And Dan, oftentimes when we talk about the grain market, we talk about it also on an international scope. And so, are there things happening internationally that could impact the markets in Kansas and the US?
You kind of strive to find a word to describe it. I think there's a plethora of things, whatever that word means. There's a whole bunch of them. And some big headlines that you catch is that crop damage in China has been enough that they will be the world's top wheat importer this year, and they are normally the world's top wheat producer. So that's a big thing. I think a lot of that business sounds like it's going to be aimed at Australia because of proximity and type of wheat. But again, that the ongoing drama of Ukraine, Russia, where Russia, in so many words, is giving every signal that they're not going to continue to allow for exports of Ukrainian crops to go. Of course, we've heard this before, and in brinksmanship, we'll see what happens at the end. But it seems to be more serious this time, and because of that, you see Ukraine going by land into Eastern Europe and causing all sorts of market distortions by those excess supplies there.
Dan, I appreciate you coming on today and once again giving us a grain market update. I appreciate it.
Thank you, Shelby. Appreciate your work.
That was K-State grain economist Dan O'Brien, and his resources will be linked in today's show notes, which you can find on agtoday.net. We're cutting to a short break now, but we have more for you ahead on Agriculture Today.